Hello, I'm Bernard Hickey from interest.co.nz and welcome to a special report on whether the big bailout will actually work. Everyone's going to be watching the US Congress tomorrow morning our time to see if the House, the lower house, passes this bill to pump $700 billion into the banking system in the US by purchasing toxic mortgage debt. But will it actually do enough to free up markets which are really frozen at the moment, particularly in the Northern Hemisphere in the United States and Europe? I'm seeing now a lot of economists and market players who are saying this bill will not be enough to prevent a meltdown in the Northern Hemisphere banking system. Some fear a widespread run on US banks. That's because just 63% of those bank deposits are insured. So that means $2.6 trillion are not insured. And this bank bailout plan is only for $700 billion. Already over the last few days, we've seen Ireland and Greece being forced to issue blanket guarantees on all bank deposits. And some people are now saying that the US government should do the same thing. Just to give you an idea of how difficult the markets are up north, many corporates there are struggling to fund their commercial paper issuance and to pay their bills on time. That's how serious it is. They're having to tap bank funding lines. AT&T, the biggest phone company in America, says it's now trading one day at a time because it can't get access to the commercial paper markets. General Motors and Ford, there are now serious concerns about whether it can pay its bills on time. Banks essentially have stopped lending to each other in the Northern Hemisphere. There's a lot of concern up there. And we have to ask the question, if there is a systematic meltdown in the Northern Hemisphere, what would it mean for us? Well, New Zealand's banks owe a lot of money to the rest of the world in short-term debt. Around about $84.5 billion has to be rolled over every 90 days. And the pressure will come on if there is some sort of banking catastrophe up north. The pressure will come on for us to reduce that debt or to repay it. In Australia, the parents of the Australian banks, of the banks in New Zealand who are in Australia, they have to refinance about $150 billion Australian every 90 days or so, so they will come under pressure. And that's where we should watch to see what happens there. What if there is a catastrophe? What might actually happen here? Well, obviously, commodity prices will drop sharply and our export returns will fall. We're already seeing that in dairy prices, which have dropped 35% in the last 2 to 3 months. Banks will be slow to refinance mortgages or particularly to do new lending. And we're starting to see that now. We may see banks ask for revaluations on refinancings. This is where you roll over your fixed mortgage. ASB's Sovereign, which is the broker arm of ASB, has already sharply tightened its lending. Essentially has banned 80% plus lending and any lending on low doc. General Electric's GE Money's operation has pulled out of fixed rate loans and Astron has just pulled out of lending as well. Key thing then is to make sure that your loans are refinanced. Do it quickly because in a week or two's time, many of the banks in New Zealand will be very careful about lending money out again. Reduce your longer term debt and cut your spending. New Zealand and the rest of the world needs to reduce its debt levels to get around this problem. And those people who are highly leveraged, who've got 80, 90, 100% home loans, do everything you can to reduce that debt. And just a final word, don't buy a house this weekend. I'm Bernard Hickey for interest.co.nz with a special report on the banking crisis in the Northern Hemisphere.